We're back on Morning Movers with a look at Palantir. The stock's fallen for 6 straight sessions since hitting an all-time high on August 12th of 190. That's a drop of 18% over that period. The pullback comes as the S&P 500 has fallen 4 sessions in a row. Despite the decline, Wedbush's Dan Ives sticking by his top AI pick. He calls this the messy and says that the drop is both healthy and a buying opportunity. Time now for Options Corner. Joining us to take a deeper look at Palantir is Rick Ducat, lead market technician here on Schwab Network. All right, Rick, let's take a look at this chart. What trends do you notice?
I mean, this chart pretty much speaks for itself. The outrageous outperformance of Palantir versus the broader market, even the 18% drop. I mean, you can barely see these other sectors, technology and the S&P, up about 380% still during that past year. And one thing that's key to me about Palantir is it's one of these companies that has a lot of government aspects to it. They have a lot of government contracts. So this could be important from a legislative risk standpoint. Other sectors too, aerospace and defense and healthcare. So we have President Trump was elected here at the yellow line. We had our budget bill on the July 4th here, and we had our Liberation Day tariffs here at our orange line. So you can see very strong outperformance from 2 of these sectors. Healthcare is the one that suffered here. So just a broader thought about the winners and losers that could be starting to take place as we continue to digest the changes coming from this administration. Not making any political comments, just these are the sectors that are really in focus right now. If we were to look more specifically at Palantir, we can see that we are at a potential tipping point, or we were close to it rather yesterday. High point here, low points here around 148. That also lined up with our orange 63-day exponential moving average near about 149. So holding the line at that supportive area for now. We can also see quite heavy volume during these down days here, suggesting a lot of trading activity here as price remains above this key supportive level. Momentum, RSI trending downward here. We did see things start to wane. We are out of the overbought area. We're below that 50 midline now, suggesting a more bearish tilt so far. If we were to look at our other studies, we can see now that we have our volume profile and standard deviation channel studies here. We can see that we have our linear regression line right about here near 160. We've got a volume small node here near 185 or so. Things really start to pick up again near about 140. So if we were to think about our options expected move for the next month here, about 14.1% based on our mark price of 155.35. So we can see there's still a pretty broad range. Everyone likes volatility when it's working for them. Nobody likes it when it's working against them, is how I feel about this whole thing.
All right. Thank you, Rick. Now to take us through an example trade, we've got Tom White, a senior options contributor and co-host of Fast Market. All right, Tom, what's the approach for an example trade, especially given the weakness we've seen in Palantir recently compared to the outperformance year to date?
Well, you have to take that into context. I think the biggest thing for Palantir that everybody's kind of scratching their head about is valuations, right? The forward PE above the 200 level. It's far above everything in the tech space and the overall market. So valuation comes into play, even though their growth rate is really strong. They're starting to move to the commercial side of the business as opposed to government contracts too. So the growth is there, but they need to grow into that valuation. And I think that's why you've seen this pullback here today. We went below that 50-day simple moving average yesterday, which is about 152.60, just above it right now. So I looked at a strategy that takes advantage of what we're seeing here. Implied volatility levels are actually expanding a little bit due to the pullback that we've seen in the stock nearly into bear market territory from those all-time highs. So don't be a hero type of strategy here, Diane. The stock traded down to 142 yesterday at the lows. I mean, that was a pretty significant drop before rebounding into the close. So I looked at a strategy that takes advantage of maybe a bullish sentiment, but still giving myself some room. I think the key thing here, you really need to stay risk-defying. NVIDIA earnings next Wednesday is going to be a key point, not only for the market, but for especially for Palantir and some of the other AI-related names in this space. So going out to the September 5th weekly cycle, so just 15 days to expiration, I'm going to sell the out-of-the-money 148 strike put, and then to make it risk-defying, I'm going to buy the 140 put. So a short $8 wide, neutral to bullish put vertical. I'm going to collect roughly about $1.80 credit if the stock opens up about 155, 156. That's what you can make on the trade, $180 per spread with about $620 in risk. But the key here is it's a don't be a hero type of strategy, because even if you're wrong and the stock pulls back but stays above 148, you can be profitable. You see the break even 146.20 to the downside. That's about 6% below the current share price there in Palantir. So if you're looking for a rebound in the shares, or at least maybe some consolidation after this major pullback, this type of strategy takes advantage of it and takes advantage of that higher implied volatility that allows you to collect more option premium.
Okay, don't be a hero. That is the phrase of the day with this example trade. Thank you, Tom.